So everyone that is seeing the recording in progress screen, if you would please just say okay, because if you don't, then it's going to continue to show up on the screen. That'll be helpful for those that are going to see this later. And welcome. Today, we're doing banking. This is, I know that for a lot of people, this is not a fun topic, but believe me, it's a very necessary and very needed workshop on understanding banking and financial institution options. Without banking, we get stuck in a lot of different needs. For example, if you need to rent an apartment, they're going to ask you for bank statements. Or if you need to purchase a home, they're going to ask you for 6 months of bank statements. This is very important for credit building, that you have a bank account as well, because then you have the option to use this when you're trying to connect to Experian Boost and a couple of other credit building modules and programs that are out there. So that's why we wanted to present on this, so that we could talk about the credit building, the banking and financial institution options. Okay. So let's start with talking about what this program is going to cover. Okay, it's going to cover the major types of insured financial institutions. It's going to give you 3 different financial institution types. And we're going to talk about the 5 reasons to use a bank or credit union and how to find the right institution for you. Because not every institution is the correct one, depending on where you are with your program. Okay, so if you can't hear me, you need to connect your device to the audio. So when you're on the audio, I'm just going to put a note in here. Sorry, folks. I'm just giving a note to everyone. You should be able to hear me unless you haven't connected to the audio. Okay? So let's go back. Let's go back and talk about what we're going to be discussing today. All right. So we just went through the different steps. Now let's go ahead and talk about what do you know about financial institutions. So I would like some of you to open up your videos. I mean your mics. And let me go ahead and let me just unmute everybody, all right? And then hopefully we'll be able to talk about a little bit about this. Can anyone talk to me about what you know about financial institutions? Do you know what they are? What are we talking about when we're talking about financial institutions?
No, I don't know.
Money,
Yes.
money.
Financial institutions are places, let me start you out with a little bit, are places where you can save your money or protect your money. So let's go with that. So what do you know about financial institutions?
Can you repeat that, please?
What do you know? The first question here, what do you know about financial institutions? What do you know about it?
Oh, they have a lot of things to offer.
Right.
If you get a good one.
If you pick the
but,
one or the good one for you, right?
Yeah, like
Because
you could have, yeah, like, well, you have to qualify, I think, for certain like APRs and APYs. You have savings and bonds. You have regular checkings and stuff like that.
yes.
Like California Coast, Bank of America, those are financial institutions.
Right.
Would
And-
would Miss Juanita would like Lending Tree and like those other like places be considered financial institutions?
They're financial institutions, you're pulling money out, so they're lending options. There are
Okay.
different options for you to be able to acquire money, lend money, borrow money, or save your money. So
Oh.
financial institutions are all of the above, anything that has to do with money, either going in or coming out, okay? So what would you like to know more about regarding financial institutions? And we want to have, just a few questions about how financial institutions work.
I have a question. What's the
Sure.
difference between like Union Bank and a bank like Navy Federal or California Coast? Because you need to know someone to be able to open an account with them. So what's the difference?
Okay, so the three that you mentioned are credit unions. Okay, all three of those. California Coast, Navy Fed, and Coast Federal, I think you said, all three of those are institutions are considered what we call credit unions. You have to be a part of some type of a group in order to be able to be enrolled in those type of programs. For example, I have Navy Fed. Navy Fed for me, I love Navy Federal, but you need to have a military, it's for military families. So we were able to enroll because some of our children are in the military. And so then we were allowed to enroll in that in Navy Fed, right? The Navy Fed, what it has is the fact that it calculates your credit differently than mostly all the other banks. So they work differently than other banking institutions. The Coast Federal is a credit union, and it's more based on some businesses and also some, depending on the employments that you're in. For example, my husband works for Sharp, so he has the ability to enroll, or he has a bank account with Cabrillo Credit Union. Okay, so the San Diego Credit Union, that would be somebody who lives in San Diego. So credit unions are part of the financial institution, but then you have your bigger conglomerates like Bank of America, Wells Fargo, Citibank, US Bank, which are different. Those are more traditional types of banks. Did that help you understand it a little bit better?
Yeah, that helped me. I'm thinking that I should probably make an appointment and see everything that they offer because some of the information you told me I didn't know, but I do have bank accounts with two of the two that you mentioned. But I really don't know their services, but that other people can get in there unless they know somebody. That's the only thing I know.
Right. And I would tell you, like, for example, with the Navy Fed, when I needed to go purchase a car, they actually just said, here's a check, go buy your car. Okay, so they were able to do that for me. And when we took our daughter and our grandson there, they ran their credit and were able to give them a credit card of up to $1,000 right off. Okay, but they will run the credit report. Okay, they will see what your credit is like.
Hi, Juanita.
Yes,
I wanted to add about the banking,
yes,
since I used to work for a bank, and I do used to work for Navy Federal. So the qualification now is a little bit different. If you have a roommate that's in the military, and you're living with them and you can prove that you are living in the same apartment or the same home, you should be able to qualify at Navy Federal.
yes, yes.
And the
They-
difference, and also the good thing about Navy Federal is that if you have a good credit and you apply for a loan, like Juanita, she mentioned she was qualified immediately. And if she must have a good credit because you can just submit it and it's like, you should.
Online, you do it online. I did it online. I filled out some paperwork on my bank account, and they said, yeah, come and pick up the check, and that was it.
Yeah,
So-
so Bonita has a good credit. That's why she was approved immediately. And the good thing about Navy Federal is, you know, you don't have to have a minimum. As long as you have a direct deposit with them,
Yes,
you're good. It's so awesome. I love Navy Federal.
I love them too. I just think they're so awesome. But then Cabrillo is really great too. It's a credit union. And then I use, I have another account, which is called First Investors, which is a subsidiary of Chase. So it all depends on what the best institution is for you. There is an institution called Bank Rates, if you guys have ever seen that.
Yeah.
And if I just put it into the post, but what you want to do is you can go in there, and here's the beautiful part about Bank Rates. You can actually compare apples to apples when it comes to banking institutions, but you can also compare credit cards for people that have good credit, bad credit, or no credit. And they'll allow you, you know, you can at that point look to see what you would qualify for and if you're able to acquire one. Because banking is hand in hand with credit building. And most of us, that's what we want. We want to have that credit building ability, especially nowadays when everything is centered around credit. Everything. If you don't have a good credit score, or even if you don't have any credit score, it's going to be very difficult for you to move forward with a number of things. For example, if you want to purchase a car, or if you want to rent an apartment, or if you want to open up utility bills, or if you want to, like I said earlier, enroll in Boost, Experian Boost. There's all of these different items that want you to have a good credit score in order for you to be able to, or at least a banking account, I'm sorry, in order for you to be able to move forward.
Juanita,
I have a question for people who are barely making credit scores. Which bank is better for beginners? I think for beginners, I've always seen that US Bank, I think, and Citibank are good options, as well as San Diego Credit Union.
I think Navy Fed, it's great too, because I started with a secure credit card at Navy Fed. So I
Yeah.
deposit $500, and after a year, I was able to get $1,000, and I'm talking about maybe 6-7 years ago. And right now, that credit card, I have a credit limit of $25,000.
Yes,
They 3 years ago, they give me a check, as you said. I asked for a loan. I was in my mind, I wanted to buy a used card, and they authorized me for $16,000. And I went to a dealership. I did shop around, and I went to a dealership in Escondido, and I was able to buy a brand new car for $16,000. I have a Kia Soul 2019, 0
Mhm.
miles back then.
yes,
And it was out the door. I got the check. I went to the dealer and I said, listen, I don't want to spend $1 more than this. This is what
Right.
I'm gonna pay, and this is what I want. And I was able to talk to the salesman, give me my car for $16,000, great APR. I think I paid maybe 2.8. Now my
Right.
credit is great. Right now it's at I started with them at maybe in the 500s, my credit.
yes,
And right now my credit is almost 800.
yes.
My credit limit, one credit card, it's 25,000. The other one is 15,000. I asked last year for a personal loan. I was authorized for 20,000.
Mhm.
Nothing, and it was a personal loan. I had nothing. I don't have any property. So, but that's when COVID started. So I give it back right away because I wasn't gonna have the income to pay it back.
Right.
But Navy Federal has been great to me and my family. In my case, we all went to Navy Fed because my brother-in-law parents are in the Navy. So my brother-in-law got into that bank. My sister pulled my parents. My parents pulled every single one of us siblings.
Yes.
And now my kids have that. So I'm not directly related to anyone in the Navy or any military, but I know that there's a couple months on the year when you can refer friends and family. You not necessarily have to be in the military, but you can use somebody as a reference there's like sometimes they do it like twice a year when you can pull friends and family
Uh-huh.
to be at that bank. So at least to me, Navy Fed as a starting bank, it was fantastic. I don't recommend Wells Fargo. It was really shady with me.
No,
Bank of America
no.
too.
Yeah,
It was bad. I had really bad experiences with them.
yes,
But
Me
Navy
too.
Fed has been great with me. Again, my credit right now, I think it's 796 when I started from the 500s. I try not to spend, as soon as I spend the money, I try to pay it off. When COVID started, my debt did went up, but as soon as I was able to get some income, I put it into my credit cards. You know, my credit cards are great, just try not to spend more than 20% of whatever credit I have on my credit cards.
yes,
I pay bills with the credit cards and I just pay them back right away. So
Yes.
just to keep them working and function. And honestly, it has worked wonders with me. As a Hispanic, as Mexican, I grew up in Mexico. We're not used to have credit because for us, it's you know, you have the cash, you can pay it. If you have the money, then you can buy something. We don't use credit. You need the cash in hand. So it was a learning experience because I'm a first generation Mexican in the States.
uh-huh,
So I was able to build my credit. My credit's pretty good, but I did screw up my credit at the beginning, to be honest with you.
yes.
My credit was
happens.
really bad at the beginning for years, but then 7 years ago, I realized that my daughter was gonna go to college in 10 years. And I was like, okay, I need to start building my credit in order to ask for loans for whenever she decides to go to college.
Right,
So I'm really grateful with Navy Fed. I totally recommend it. If you have the chance to join Navy Fed, it's fantastic. If you are aware of your finances and you do not overspend, I think the biggest issue is people sometimes try to live above their means just
yes.
because they have the credit, and that's not good.
Right. So the credit card, for what she was just saying right now, the credit card is not to be used as an addition to income. It's to be used as an emergency type situation, and you need to be able to pay it off in at least 2 or 3 payments. That's the way you want to work with your credit cards. So if you go out and you put $2,000 on your credit card, which has a $2,000 limit, what's going to happen is, first of all, your credit score is going to go down because you've reached the max of your usage. And secondly, you're not going to be able to pay it off in 2 or 3 months, right? So you want to make sure that you're looking at that as some of the information that we were talking about earlier regarding your credit. But getting back to the banking and financial institution options, financial institutions provide products and services to help you manage your money. That's basically what they are. They're accounts where you can, and they have all these different, on the websites, they have all these different courses and workshops to help you understand how to work your bank and how to work with your bank to increase your credit score and get your different credit cards and such. So there are 3 types of financial institutions. So we have the banks that I was just talking about earlier, which are like the Wells Fargo and the Bank of America and the, you know, all these large banking institutions, Chase. And honestly, I'm in the same boat as all of you. I had very bad experiences with all of those banking accounts, and I just don't use them. I am really happy with the credit unions. They're more personable. They are more able to work with you one-on-one, and they are more able to look at your particular situation and recommend a product that's going to work for you, because they do have different products depending on your needs. Remember though, that if you have been in a bank before, in a banking institution before, and you had a problem with that, where you overdrafted the account and closed it with a balance, then you are going to be in what they call a check system. When you're in that check system, then you are not able to apply for a new, to open up a new account with many of the banking institutions. You are like what they call blackballed. It is kind of what it happens. Now, there are 2 institutions, I believe it's the US Bank and one other, that do allow for second chance banking, but it would not be in a checking account setting. It would be more of a savings account setting. okay? And then you have saving banks, and then you have loan associations. And those are people that lend you the money that we were talking about earlier, like the thrift and loans, or those, I don't even know all the names, but I know that there's a lot of people that go out and borrow money from these properties or agencies, and then they pay really high interest rates. So that's kind of what they're talking about, okay? And so for the bank and credit unions, the banks, so that we know the difference between the two. And this is your Wells Fargo's and your Bank of America's and your Chase. These are banks that are for profit. There's no membership required, maybe privately owned or publicly traded. They generally have lower savings rates and higher fees. This is why a lot of people with lower income have a difficult time working with the banking institutions because of the rates. Their fees are really high. Typically, they offer many varied financial products and deposit. These are your bank accounts are insured by the FDIC, which is the Federal Deposit Insurance Corporation. So if somebody were to take your money from your bank account, or if they were to, somebody were to steal your ATM card and use your money, you could get it back. So that's what we're talking about when we talk about banks. Credit unions are non-for-profit. So there is usually a membership requirement, sometimes with eligibility restrictions. So we were talking about military or being in the city of San Diego or working for a certain agency, okay? It's owned by the members, which means that all of us own these particular credit unions that we work with because our money is making it work. They offer higher savings rates and lower fees, but they are more limited in the financial products offered. But they are also insured by the National Credit Union Administration, which is also an administration that insures your money. So in both of these instances, if you were to lose your money, let's say that you cashed your check and you put it in, or you deposited your check into the bank and somebody stole your credit card or your ATM card and used all your money, you would be able to get that money back. But if you were to go to a check cashing place and cash your check, put it in your purse and walk out and somebody steals your purse, your money is lost. That's the difference between having a bank account and not having one. You're financially more secured regarding your money. Okay, and I'm gonna look at all of the questions right after we finish because then I get distracted. Okay, sorry. So about savings banks and loan associations. So these are the others. They accept deposits from individuals. They make home mortgage loans. They pay dividends. They're also known as thrift, okay? And now offer same services as banks. So, for example, I think Credit One or Capital One, that I would call a thrift, okay? Because they do have the ability for you to set up a savings account. They also can lend you for a car, they can lend you for mortgage, and they also have investment options and they pay you dividends, okay? So this is what we're trying to talk about, or people that, some of those agencies that are out there that are your mortgage holders, okay? So they would do the same. They offer all of these different options for you, but they're primarily a lending institution, but they offer other products for you, okay? So do you have an account with a financial institution? And from what I'm hearing from all of you, it sounds like most of you do. And if you don't, we can talk about later why that is. And what are some of the reasons to keep money in your financial institution? We just talked about that. And what is one reason that you would make you keep your money in the financial institution? And so here's the thing. A lot of people, and I get this a lot from my clients, where they tell me that they overdrafted their account. And when they checked on the account, they had money in that account and the bank should have told them that the money wasn't there, okay? Here's the thing, the bank is expecting you to keep control of how much money goes into your account and how much money you spend, That's what they're expecting you to do, all right? All they're gonna tell you is, you know what, you went over. But for example, if you have a checking account and you put $800 into the account and there's $200 in that account already, you have $1,000 in that account. And your bank is going to automatically take out $250 for your car payment, right? So that means that you only have $750 left, right? They're gonna charge you $25 in fees, so you have $725 left, right? You went and you shopped and you paid some bills and you ended up spending about $600 in all of those bills. But all of the bills, the bank hasn't taken all the money yet to all of these different people that you paid this money to, right? So your bank is showing that you only have, that you still have $400 in that account. So you want to pull out 200. My question to all of you is, can you?
You can, but you're gonna incur fees for overdraft
Correct. And why is that?
because you took something that was already spent.
Correct. And that's what is the,
enough.
yes, and that's what the most important part about banking is. Having the ability to track how much money you're spending and how much money will be left after all of the money is taken that you've already spent. Okay? If you don't keep track of the amount of money you're taking out, then there's gonna be a point where you're gonna pull out more than you were supposed to, and now you're overdrafted, and now you owe all this money, okay? So it's always important for you to monthly, I mean, the way I track it is every month I say, okay, all of this is gonna be auto pay. This is what's going into this account. Auto pay, these are payments that are gonna come out automatically. So this is what's gonna be left over, right? And so from this account, all I can use is this much money and the rest has to stay there. Now my bank account could reflect that I have $2,000, $3,000 in there. But the reality is that I don't, because money's gonna be coming out of there automatically over the month, all right? So that's why it's important for you to keep track of how much money is going in and coming out. And that is one of the main reasons why people don't keep a bank account, because they're not clear on how to maintain that control. And we can help you with that. We can help you understand how that works and how to keep that control so that you're able to manage and maintain your bank account. Because it's really, really important. Somebody asked, I saw in the chat about the Experian Boost. The way the Experian Boost works is that it takes all the monies, like all these automatic payments that I'm saying that I have, right? It's gonna go into my bank account. It's gonna check to see how many auto payments I have that I'm making on time. It's gonna take that information and it's going to give me a good score for that and give me some points for that and increase my credit score. Okay, but if you don't have auto pays or you're not making payments through a bank account, there's no way that Experian Boost will work. Now, the reason I use Experian Boost is because most renting agent companies, management companies, use Experian to run your credit. So that's why it's good that you have that information, that you have that number high. So when they run your credit report, it shows as a good score. Okay.
Thank you.
So the reasons you want to keep the money in your financial institution is, again, as we indicated earlier, safety, security, convenience, cost, and future financial, positive future financial consequences, which means your credit score, your ability to boost your score, your ability to manage your money, your ability to get a loan for a car or for anything else you may need, and your ability to be able to buy a home eventually, okay? Banking is one of the financial institutions that's most important, even above a credit card, to help you build your credit score, because it shows stability and your ability to manage your money. Okay. Let's see. So what we want you to do right now is think about what a financial institution, if you don't already have one, what is right for you? So you want to ask yourself, what is important for me to in a financial institution? What products and services do I want, I need? Do I prefer a large institution or something smaller? What type of account do I want or need? And do I need a second chance? And so this is what I want you to think about, because this is just a bunch of questions, but what you want to do is this. If you have family in Mexico, let's say, right? And you have to send them money all the time. You want to look for an institution that's going to be able to allow you to wire money or send money through Venmo or Zillow or whatever else, with Zelle or something else, where it's not going to cost you anything, right? Because that's one of the places where you're spending more money, right? But if you're not somebody who's having to send this money to anyone, then that may not be a feature that you need. But let's say that you do need a feature that allows you to be able to get your money a day before, you know? So there's some financial institutions that will allow you to get your money into your account earlier. And then at that point, you have your money beforehand, right? Do you need money orders often? Do you pay everything through money orders? So you may want to look at an institution that's able to offer you free money orders. You know, are you able to get an ATM card? Do you need a checking account? Do you need a savings account? So these are the things that you're looking for. Do you have a young person who's 17 and below? So do you want to open up an account for them? Does this banking institution offer something like that? So there are different factors and what's going to be right for you. And that's where you want to go in then and do some homework. Because once you get into a bank account, it's really hard to switch. I've had my banks for I don't know how many years now. I've lost count. But I have 3 different accounts. We have one for the house. We have one that my husband has, and then we have one that I have. In mine is all of my, a certain amount of money goes into there for my car insurance, my life insurances, and for my own, my allowance money to spend on my hair and to spend on other stuff that I want, my nails and stuff like that. Then he has his. And the reason I have his separate is because he tends to not have that control on his bank account. And so he just spends and spends and spends, and I have to be after him watching his account. And then we have the house account where we pay all the bills. From there, we pay the mortgage, the utilities, we pay for the food, the car, everything else. Okay. But from the first 2 accounts, we have also 401ks and IRAs and such, where money is pulled from there to go into our different investment accounts for when we retire. So that's why it's important, if you're going to have a different account, what are you deciding to do for your banks? How are you going to work those banks? Now, mind you, I did not have 3 accounts when I was younger. This came as I got older, and we found the need to begin to do something for retirement, to do something for life insurance and so forth, okay? So it's important that you decide what stage in your life you are in. What are you looking for when it comes to a banking institution, and how do you want it to work for you? Okay, you're interviewing these different banks to decide which one is going to work best for you, the same way as you are being interviewed when you go to look for a job. Okay, and don't feel bad to ask questions. It's important. Okay, so I'm looking to see what else you have to ask when it comes to the right institution for you. These are the questions you want to ask the bank that you're going to go and meet with, all right? What type of checking and savings accounts do you have? Some of them are free, some of them charge a fee, all right? So you want to make sure that you know if they got free checking, and if they, or is there a monthly fee for the checking account? Do they have a savings account that has to have a minimum balance in it? Or can you have it at $5 or $10 or $25 and just add to it, right? Do you offer second chance checking options? And this is for those of you that want to be able to pay with a check versus having to go and buy money orders, right? What is the minimum deposit needed to open the account? Some of them require that you put in more money than others. Up to 100, 200, 300. So you want to make sure you know what is the requirement for that. Are there minimum monthly balances? Like Wells Fargo, I believe, and I think Bank of America, they have some bank account, some accounts that require that you have, I think it's $300 or $400, or they charge you more every month. It's been a long time, so I think they've changed a lot of stuff, but that used to be something they used to do before. Are there monthly maintenance fees on this account? Is there any banking online, and is it for free? You know, because I can check any of my bank accounts and I can go in there and it's all for free. They also give me a free credit score whenever I need it. Is there a direct deposit available, and is it required for you to maintain the account? Free. Some of them will charge you if you don't do a direct deposit, and they will give you a free checking account if it's a direct deposit option, all right? How many branches and ATM fees are out there? So here's the other thing. How much do they charge you for ATM fees? Okay, that is something that a lot of people don't take into account when they have an ATM card. They pull money from one bank account, from one institution, from another ATM machine and another, without taking into account that some of them are charging them $2 or $3 every time they pull money out. So let's say you do that 10 times in a week, that's $30 more or $40 more, you know, that you have now added to your debt. That's going to come out of your bank account. And it can build up over the month. So you want to make sure that their institutions, if this is something you do a lot, then you want to make sure that they don't charge you for that. One of my bank accounts doesn't charge me for ATM fees. They put it back in, all right? So you want to make sure that that's something that you're aware of. And what are the fees for withdrawing money from another bank? So let's say that you were to go to Wells Fargo to pull money out from your Navy Fed account. Are they going to charge you more money? That's the question. So to kind of clarify what that means, okay? And let's see. So in summary, there are 3 types of financial institutions. We've given you 5 reasons why you want to keep your money in a financial institution, and asking questions and researching options to find a financial institution that meets your needs is what we've discussed today. We're going to go through all of the questions right now, but I just wanted to make sure that we had that that I had gone through the actual PowerPoint. Sorry, it's late in the day, folks. Sorry about that. So let's go back to the questions. So I think I left it at the beginning. I did the same. I talked about, okay. My views on California Coast Credit Union. I've seen some good stuff and I've seen some bad stuff, but again, it depends on the account that you open up. If you open up an account that carries a high fee ratio when it comes to NSF fees. For example, if you're new to banking, the one thing you do not want to do is get an account that's going to charge you $30 to $40 every day that you're overdrawn. Because if it does that, then what you're going to do is end up with, in a week, $100 or $200 worth of fees for being overdrafted. Okay, so that's one of the important things about California Coast Credit Union, that they have some products that have a high NSF fee ratio, but you have to ask them to give you the ones that have the lower, all right, if that makes sense.
I have a question.
Yes.
Okay, I'm building my credit. This is Shakita. I'm building my credit, and so I've seen changes. I also have boosts, and so I took out a secured credit with Navy Federal. Should I take out a secured credit with California Coast also? Or
I would
should
just start with the first one. I mean, you want to start with one, and once
Okay.
you get the hang of it and are working good with it, then you want to open up another. You don't want to see. Here's what happens when they start to pull they pull your credit
Mhm.
to see if you qualify for any of these credit cards. That's what's called an inquiry. That inquiry is on your credit report, and your credit score drops by 2 points every
Mhm.
time you have an inquiry. Now, those inquiries last 2 years on your credit report before they go away. And so when you do too many credit checks and inquiries, it starts to build.
Mhm.
You know, if you apply for 30 credit cards or 15 credit cards or 10 credit cards, now you have 10 inquiries with a reduction in your credit score. It depends also on what you're looking for. For example, if you go out and if you're looking for a lender to approve you for a loan, in the first 30 days, most of the credit reporting agencies are only going to consider you having one inquiry. But if you wait over the 45 days and they start charging, then it's going to be 2 or 3 or 4. So it's really important that you take your time and consider what you've got with your credit cards and not just go and apply for too many at the same time. I hope that answered the question.
Okay. The other question is, now Boost, they keep sending me messages like, congratulations, you now, I can apply for credit cards through them. Like,
Yes.
so I didn't know if I should do that either. So I haven't done anything. I just kept the one credit card with Navy Federal.
Yeah, at this point, the best thing to do, Navy Fed is going to be the best option for you. And here's why I'm saying that. Kira. Because they have the lowest rates.
Mm-hmm.
They pride themselves in saying that they have the lowest rates. I have a credit card with them, like the person that was talking earlier today, a $25,000 credit. I have actually 3 credit cards with them, all of them with $25,000 credit limits, and the interest rate on those are like maybe 4 or 5%. Compared to if I were to get an American Express or Discovery, their interest rates are maybe like 28 to 35%.
Mm-hmm.
You see the difference?
Yeah.
And so what happens is that when you get a credit card with a high interest rate, you put yourself in a bigger danger of getting yourself into trouble because
Mm-hmm.
you're making the minimum payments, but you're not reducing the debt.
Right. Okay.
Because it keeps going to interest. But if you've got yourself a low interest rate credit card, then you're paying more on the balance and it's coming down faster.
Okay.
If that makes sense to you.
Yes. Thank you.
Okay, so just take it slow. To build your credit, you want to take it slow, little by little. Okay.
Okay.
I might be working for US Bank. They are a very good company. Yes, they are. US Bank is a very good company. They give second chance loans. My son has been with them forever. My mom has them, and my mom gets herself into trouble all the time. So I'm there as one of they have for seniors the option that they call the adult children of the seniors and let them know when the parent is going into trouble. So that's how I find out when she's doing stuff she doesn't need to do, and I need to help her out of it. Okay, so I mean, like I said, it depends. The US Bank for my mom is the perfect option because she gets herself into trouble a lot. And so I had to keep pulling her out of that. And they let me know. So I love them for that. Okay. Get online banking so you can keep track of all of your transactions. Yes, online banking is the best way for you to review your accounts. Every beginning of the month, all of us should do this. It's important. On the first of the month, or like by this time, for example, I've already checked to see when are our paydays in August, how much money is going to come in, what bills are due, how much is going to go into each of the accounts, and how much is going to come out, and what's going to be left over to do anything else with. Okay, so it's important that you keep your transactions and you keep looking to see what's happening with your bank. Okay, and know how much money is coming in and coming out every month. why banks report savings to IRS. So the banks, the interest rate on the bank account, if you have a good interest rate, they're required to give you a tax form that shows how much you earned in interest. You may not have a lot. It's just a requirement. It's like when you are on Section 8 and people think that they can't have more than $10,000 in their bank account. That's not the truth. The truth is that what they're looking for is we are required under HUD guidelines that anything over $10,000 and above, we have to add an interest rate to that amount, even if the bank doesn't offer it. So we have to add a 2.5% interest rate, like if you were earning that amount of money, and then we calculate it into your annual earnings. So it's about $250 a year, which divides up to about $10 to $12 a month. Okay, that's why. And I don't know if I qualify for the workshop. Okay. For the workshop on Monday, if you are not on Section 8, you will not qualify. It's for people that are on Section 8. Okay. And then when the banks report your savings, if it is over 10,000, they always report anything over 10,000, but what they're reporting is because you're earning the interest, like I said earlier.
I have two questions.
Uh-huh.
My first question is, how come institutions can easily send your name to the credit bureau? And if you owe the government money, can they take it out of your savings and your checking account?
Here's the thing, and that's one of the reasons why I don't like Wells. It depends on the bank account. It depends on the bank, the banking institution. I had a client who was with another man, and she put she became partners with somebody, and she had her bank account, and she put him on her bank account as a joint person on her account, and he owed child support. And without her knowledge, they just pulled out all the money that was in the account, in both the savings and the checking. Now, another bank would have probably let her know this is what's going to happen, but they didn't. They just pulled it, and that was it. Okay. It took me a while to get that money back because we had to prove that that money was not his, it was hers, and she had to take him off as a joint person on her account. So it depends. But the bank IRS is the only person, IRS, EDD, any government entity are the only ones that can come in and take your money. And the banks, because they're federally insured, have to give it to them. But my thing is that some of the banks will let you know that it's going to happen so that you have time to figure out what you're going to do, right? But that's what happens when you owe money. That's why it's important that if you owe it, we talk about how do you address that before it happens. Okay. For example, student loan debt has been on hold because of the pandemic. No one has made any payments. And if you were in default at the end of when the big pandemic began, once September hits, when that hold is taken off, a lot of people are going to start to see that their income tax and their bank monies are going to be starting to disappear. So my suggestion is that you start to work with your banking institutions regarding your student loan debt and try to get it addressed and put into deferment or put into some kind of a payment plan so that doesn't happen. Okay? Child support is another one that will just come and take your money.
Why are they able to, like, say you have a bill from the hospital or something, or it's a bill that you didn't inquire, but they can I just feel like they can easily put anything on your credit, but it's hard for you to get it off of your credit.
Well, here's the thing, that when it comes to bills, for example, a medical bill, if they send you a bill and they say you owe this money, the way the bank, the medical institution is thinking is, well, you should have seen the bill and you should have told us it was wrong before we put it on. We sent you enough documentation to say this. Now, can we dispute it? Yes. If you have Medi-Cal or you have some kind of a medical insurance, when you come to me or you come to any one of us that are credit counselors, what we'll do is we'll ask you for proof that you had medical insurance at the time. I will send that along with a dispute form to the 3 credit bureaus and have them remove it from your credit report. Okay, so it can be taken off. Okay,
Okay.
so as long as you pull the money from the same bank, you should be free for your debit card. Okay, I'm not sure what that means, but okay, savings. Apply for e-statements so you don't get charged for statements. That is true. So e-statements are electronic statements that you can pull off of your account. So when you set up your bank account, you go to the institution and they open up a bank account for you and they give you all this information with this big old envelope. And now you have a bank account. What you want to do is come home, get on your computer and set up everything online so that you're able to then look at your accounts. You're able to see what's happening there. You're able to sign up for e-statements and you can do transfers. You can do all kinds of things online if you have it all set up. And that way the bank doesn't charge you a lot of money. Their fees are less, okay? And so when it comes to bank accounts, I mean, credit cards and all of those things, the 3 credit bureaus, so FICO, what happens with FICO is that you have to have at least 6 months of active credit activity on your report in order for them to give you a credit report or a credit score or to use that information to for your credit score. So if you opened up a brand new credit card and it's only 2 months old, they're not going to consider it an active account until it's been 6 months that you've had it. That's why a lot of people, when they come to me, they tell me, I opened my account, I should have a score. And then when we look, there's no score because 6 months haven't gone by yet. Okay. So it's important that you know that the Vantage score is different because they tell me, well, on Credit Karma, it says I have a credit score, but Credit Karma is a Vantage score and it only requires 3 to 4 months of active credit activity. Okay. Yes. So one of the things that happens is before there used to be a lot of money laundering, and I think what happens in the most cases is here in San Diego. San Diego, because we're so close to certain areas, anything over 10,000, they will report to the IRS because they're thinking that there's some money laundering. I remember that I went to one of our sons had Chase, and we wanted to send him money because he needed money for his baby's Pampers and milk and whatever. So we were going to go deposit into his account cash so that he could pull the money out in Texas where he was. Well, the bank wouldn't let us deposit cash. We had to actually go buy a money order, come back, deposit the money order, and then it would take him 3 days to get the money. It was faster for us to get him the money through Western Union than depositing it into his account. So again, it depends because where he lives in Texas, that doesn't happen. He doesn't have to do that. But here in San Diego, they required it. So those are the kind of things that you're looking at when you're talking to the banks. What will happen if I want to deposit cash? What will happen if I want to do send money to somebody? Okay.
I had a quick question. So you mentioned for student loans, what if they're going to take everyone's money? Even if you are in school?
If you are in default. Do you know what default means?
No, ma'am. What if I'm in school right now?
You're not in default. You're not in default,
Oh, okay.
okay?
Sorry.
So if your father was in the military, you may be able to go and apply
Mhm.
for a Navy Fed, for the Navy Fed account, okay? I can apply if I have an account sponsor.
So when I go, if I want to get a Navy Federal account, like I just tell them, oh, my father was a veteran.
They're gonna ask you if you have a family member that was a veteran, and you say, yes, my father. And that's basically what they're gonna ask you. But you have
okay,
to
so-
have the money coming into that account, remember, and it has to be consistent. Okay,
Oh, okay, thank
Okay.
you.
you're welcome. They didn't ask us for anything when we went. We just, they just asked us if we had somebody in the military. We said, yes, our sons. It helped that my husband carries one of our son's pictures on his wallet, but that was it. That's all we got. So we went a little bit over. I think. Okay, so now they ask for a number is what they're saying. They ask for the DC. The DD 214. Okay, so somebody is suggesting that you not use your debit card for purchases online, use your credit card. And I do the same. I have a PayPal account. And so my PayPal account is what I use to buy stuff online versus my debit card or any credit cards. And that way I'm safe that if something happens to that account, that's the only one and nothing else. Okay. Also, I just talked to a client yesterday, and you need to be careful about this, that told me that they were a couple of months ago, they were told that if they paid $239 or $249 a month, the interest rate on their student loans wouldn't go up. And so we asked, when did that happen? And the client said 3 or 4 months ago. So just be aware that right now, student loans have been put on hold. There should be nothing happening with student loans, and nobody should be calling you to ask you for money to keep your student loan debt down. Okay? I do recommend CD accounts and savings accounts if that's something that you have the money to put money away with and hold it. Just remember that CD accounts are set up in such a way that you can't pull out the money without a penalty after a certain amount of time. So they're set up with like maybe a 1 year, a 5 year, a 10 year. So the more time you keep it there, the more money it earns. But if you pull it out ahead of the time, then they're gonna charge you a fee. So that's why it's important that if you're gonna do a CD account, it's with money that you're not gonna use anytime soon.
Someone had told me about mutual funds because I was able to save money really for the first time, like close to 5,000, but I don't know what to do with the money. And I got it at Navy Federal. I don't have any credit card or debit card attached to this savings account on purpose. Someone was telling me about mutual funds and things like that. Can you speak on that for a little?
You may want to I would talk to Navy because they have some really great money market accounts and some other investment accounts. I know that, for example, Capital One has, if you open up an account with them, they give you, I think it's $250. So you want to look to see what's out there. I also, if you have enough money that you're not going to use it and it's going to stay in one place, then depending on what you've got, because I mean, for example, we have, or me and my husband have a financial advisor for our retirement. So what she does is make sure that, we're putting money into an account with them. We have a couple of IRAs, And once we build every time we go over the 6 months of savings for our income, they take that extra money and they put it into an investment of some kind. Okay, so it's important for you to look to see how you can invest your money in such a way that it's still safe.
Mhm.
Nothing's going to happen to it. Okay, but if you're going to need that money later on down the line, then you
Mhm.
may want to put it into a money market account, which has some interest attached to it, but you can't pull it out right away.
Okay.
There will be a penalty if you pull it out sooner.
Mhm.
Okay.
Okay, thank you.
Yes, it would be nice if we had somebody, that would be good. We could get a financial advisor to speak. Okay,
So I just wanted to tell you, I'm really happy because I got approved for the rental assistance, but I just, I was like crying all day yesterday. I was really happy because
That's
considering
good.
everything that happened.
uh-huh.
But
They
I
pay
just,
100% of your rent. That's wonderful. Congratulations.
thank you.
Congratulations.
After this year, it's been tough.
Yes.
But so who do I follow up with? Like the leasing office? Because when I went down there today, I don't know what I'm doing.
For what? You got approved for it. And so what's going to happen is that the landlord has to update his portal information so they can send him the money. Okay. And that's what's been the delay for a lot of people, that they don't realize that the landlord has to do something on his portal in order to receive the money. Okay. You don't
Oh,
have to do
because
anything. If you were already approved, you're approved. The money's going to be wired to the landlord. But the landlord has to do his part, which is update his portal, his information in the portal. And by that, I mean, they're going to ask for direct deposit information and how they wire him the money. And so that needs to be in there. Okay.
oh, because my landlord is a lady, but it's like a guy, the assistant guy has been talking to them, but he says
right.
that she doesn't get back until Monday.
Uh-huh.
So I think that someone told me, I don't know who to follow up with
Yeah,
that.
you don't
'cause
need
I
to
gotta-
follow up. It's the landlord's, the money isn't going to be given to you. It's going to be given to the landlord. And so, and it's going to be wired to the landlord. So then the landlord has to do his part. And they probably already told him what he has to do. So it'll be fine. Okay. Once you get the information that it's approved, then it's in the landlord's hands. Okay.
Juanita, I have a question.
Sure.
Okay, thank you, ma'am.
For
Uh-huh.
example, if because I've been applying for jobs, I've been getting interviews. So if you get approved for the rent, to help you with the rent, and then you get a job, do you have to pay back?
No, because you're getting paid for back rent, not for forward rent. Okay.
Oh, okay.
You're fine.
All
Okay.
right. Thank you.
You're welcome. Well, we've gone over a little bit. I hope that wasn't too bad for everybody. And I hope you got enough information that this was a helpful workshop. And so at this point, I'm going to stop recording. And if you have any other questions,